Hi guys, this is Bilal and welcome to my YouTube channel Forex Billionaire. Before the start of the video, I would request you to go on the bell icon, subscribe the channel, like the video, and if you like the video, please share it. I always say in this market, if you want to win profit in this market, you should have a patience. You should have, if you want to win in this market. So traders, I always say, if you want to win in this market, you should have patience. You should have steel nerves. You should eliminate the greed factor. You should learn about risk management. You should get knowledge about this market. And after that, you should have your back testing. You should be doing paper trading before you go for the live trading. So after these all factors, still you cannot go for the 100%, still 70 to 75%. If you're achieving 70 to 75% trades of yours are going for the profit, that's a very good response from the market. But for that, you need to do back testing. You need to get the knowledge. You need to be patient. So for today, our topic would be of chart patterns, and we will learn about the reversal chart patterns, the neutral and the continue chart patterns. So we will start with the reversal chart patterns, and we will learn about different reversal chart patterns today. And in our next videos, we will learn about the continue and the neutral chart patterns. Okay, so I will show you the live chart patterns on the live trading chart. Okay guys, so today we will learn about our first chart pattern, which is a reversal chart pattern known as double top pattern. So in this picture, you are seeing that the market is in a uptrend. Okay, the market is going up. After going up, there is some resistance which we can say as a resistance 1 of the or the left peak. We can say that R1. Okay, from there market goes down, but the market get a support. So we can say that this is a support line or the neckline, and from this neckline the market get the push upward. Okay, so this was the resistance 1. Okay, the market goes down from that resistance 1 to the support line or the neckline. From there the market get pushed, or you can say that from there the buyers get push the market to upward, and there the market reached to some resistance to R2, and from there the market is going down again. So you can see this pattern is a M pattern, because for the double top pattern we also say that M pattern. So it's this pattern is also in a shape of M. Okay, so market was in uptrend. From R resistance 1, market goes down to the support line or the neckline. From there the buyers push the market goes up again to R2 resistance 2. From there seller was activated, pushed down the market, and eventually the market break the support line. And once the market breaks this support line, there was a retest and market goes back down again. We will look this on the live chart, and here we can see our next chart pattern, which is known as double bottom pattern. It's in a shape of W. The double top was in a shape of M, and it's in a shape of W. You can see the market was going down, and this we can say that support 1. From here the buyers push the market to up, and then the resistance line, which is known as neckline, there was sellers waiting to push down the market. From that point market goes down again, and then we can see the market reach to support 2. From there the buyers again push the market, and eventually it breaks this neckline or the resistance line, and after the retest market goes up again. So this was the trend reversal, because the market was in downtrend, and after this breakout of the neckline the market goes up. So it's a trend reversal. The market was bearish and now the market was bullish after the breakout of neckline. So traders, now you can see this chart pattern is known as triple top pattern. It also a reversal pattern. It's an example from a chart, but we will see on the live chart as well. The market was in uptrend, then there was a resistance where the seller activated. The market goes down. Okay. Then there was a support for the market. From there, buyers pushed the market again to up. Okay. Then there was the resistance too. The market pushed down by the sellers from that resistance, and market touch the neckline or the support line again. From there, buyer pushed the market again to the same resistance which was already touched twice. And this is the third time the resistance has been touched. So we can say that three times the market has touched the same resistance. Almost the market has made the almost three high of the market are same. So we can say that it's a triple top pattern because there is three touching of the resistance at the same point, and from the resistance third the market goes down and the seller pushing the market down with a full force, and the market goes up, and the market will retouch the neckline from here, and then it will go down again. So the market was in uptrend, the market hit the resistance, goes down. From there, buyer pushed the market again. They tried to break this resistance, but they couldn't. They get seller from resistance again. The market goes down again. The market goes up. The third time, it tests the same resistance, but it couldn't break. So market goes down again. And this time, the market breaks the neckline and goes down deeper. So trader, here you can see it's a total opposite of the triple top pattern. It's triple bottom pattern. Here you can see market is in downtrend, market hit the support one, market goes up again, market again hit the support two, the same support market hit third time. So this is the third time. One time, second time, and the third time market hit the same spot. It's known as a triple bottom. And from there, buy push the market and it breaks the neckline. Once the market breaks the neckline, it will retest the neckline and it will again goes in uptrend. So this is known as the triple bottom pattern. You can see it's almost a W-shaped pattern. So guys, here you can see there's an example of double top pattern known as M pattern as well, and it's a reversal pattern, the bearish reversal pattern. Okay, now you can see the market is in clear uptrend. Okay, the market is going up. What happened here? There is a resistance. From this point, the seller pushed the market downward. This is the neckline where the market gets supports, and from there the market gets support from the buyer, and the market again goes up from there. Now you can see the market get pushed from the neckline and above. Once the buyer pushed the market, again market touched the resistance, almost touched the resistance. Sometimes we cannot see the perfect M pattern. Sometimes the double bottom pattern as well as the double top pattern, you will see there is some difference remains between the resistance 1 and resistance 2, but at least it almost seems like that, and there is also the resistance. So traders, here you can see the market is in clear uptrend. Okay, from there is a resistance R1, which you can say the resistance 1. From there the seller pushed the market towards downtrend, and the market get a support from the neckline. There is the buyers are waiting there to push the market back up. So market was in uptrend, the seller pushed the market down, the market got support, and from there buyers pushed the market again up. The market tried to break the resistance which it already touched, but it failed to break the resistance, and because of that failure the market again tried to break the down neckline, and it succeed. The market break the down neckline. And after the breaking of the neckline, the breakout, the market retest. The market, here you can see the market retested the neckline. And once it retested the neckline, this is where you can take your entry. This is your entry point. Once the market break the neckline, so you can see the market break the neckline. Once you see the market is break the neckline, and you can also see the volume. Here you can see the volume of the breaking candle was too high, so that was a genuine breakout. Sometimes market do fake breakout, fake breakthrough as well, but the volume of this candle was high than the previous candle, so you can say that this is the genuine breakout. And once the market break down to this neckline, the support line, the resistance or the support is can be known as the neckline. So this neckline is basically a support level. So once the market break down to this support level or the neckline, the market will retest, and once the retest, you can take the entry. And what should be your target and what should be your stop? So your stop loss will be above that resistance, the R1 or R2. R2 would be more fine. So you can keep your stop loss above the resistance 2 from where the market goes down, and target should be around 1 by 2. Like risk reward ratio would be 1 by 2. So for example, if your stop loss is 50 pips, your target would be 100 pips or more than that. That would be a more realistic target. You can go more higher than that, one risk reward ratio 1 by 3, but it will take a lot of time, and in most scenario might be possible the market can reverse. Or you can put the trading profit stop as well. Sometime if market goes 1 by 1, you can put a stop loss to entry. If market goes 1 by 2, you can put stop loss to at risk reward ratio 1 by 1. You can do that as well, but for me 1 by 2 will be very good return. So now we will move to our second pattern, which is known as W pattern, double bottom pattern. So here you can see the market was in clear downtrend. The market get the support. Here the buyers were active. They pushed the market back up. So market was in downtrend. Market get a support. Here buyers were active. They pushed the market back up again. From there, seller pushed the market back down again to the support level. Here you can see there's a bit difference between support 1 and support 2. You cannot get 100% chart. You cannot draw W and M on a chart. It's a live trading chart. It's very easy to draw a W or M on a paint tool with a paint tool or in different painting apps. It's easy to draw there, but on live chart you will never get 100%. It will be sometimes there's difference between support and resistance, but at least you can see that it's making a double bottom. So here is a support 1, and market goes up from there, touch the resistance, and from there seller were activated. They push the market towards down, and it's known as support 2 as well. So there is support 1 neckline, support 2. So from there buyer push the market again back up, and they tried to break the neckline which was there, and you can see they succeed. They broke the neckline, they break through the neckline, and from there you can see the market come again to test the neckline. And it will, in 90% cases, it will happen once the market break through the neckline, either going up or either going down. The market will retest the neckline in 90 to 95% cases. So where we have to take the entry, that's the $1,000,000 question. We have to take the entry once market break through the neckline and come back again to retest this neckline. This is the neckline. I can show you the dotted lines so it will be easy for you. This is the horizontal line. So this is our resistance area or the neckline area. The market goes up and goes down and retest the neckline, and from there you can take your entry. And where should be your target or stops? Your entry would be here while the market retested successfully, and your target would be, I will draw it for you, the target, your target will be here approximately 1 by 2, and your stop will be your support 2. So your stop loss will be below your support 2, will be, it will be your ideal stop loss, few pips below the support 2. Okay, where the market got the push up, there you can put your stop loss, and your entry will while the market get the retest this neckline, and from there you can take risk reward ratio 1 by 2. It will be more favorable and realistic target. 1 by 1 it will be less, but 1 by 2, 1 by 2.5, it will be more realistic target. So that was a double bottom. Also you can see the shape of double bottom is like W pattern. So now we will see the triple bottom and the triple top as well. So guys, here you can see the market is in clear uptrend. The market hit the resistance. There was resistance. The seller got activated from that resistance and pushed the market down. This point from where the market get the push up again and the buyers got activated, this we can say a neckline or the support line. So this point will be our support line. The market goes up again. It tried to break through the resistance, but it couldn't. So that point we can say it resistance number 2. From there, the seller again activated, tried to push down the market and tried to break through the neckline or the support line, but they failed to do so. But in the double top pattern, from resistance 2, when the seller pushed the market down, it break through to the neckline or the support line. But in triple top pattern, while seller pushed the market down from the resistance number 2, they failed to break the neckline, and from there buyer pushed the market again up, and they tried to break the resistance, but again they failed to break the resistance, and that's why the market goes down again and the seller pushed the market down again. You can see here. So here is our neckline. I can draw it for you. This is our support line, or you can say a neckline. This is our neckline, or you can say support line. You can see the market was in uptrend. There was a resistance 1, the resistance. From there the market goes down to support level, then the buyer pushed the market again to upward to resistance. The market tried to break through the resistance but couldn't. The market goes down again, retested the neckline, but they cannot break through the neckline. The seller was weak there, and the buyer pushed the market again toward the resistance. This here market retested the resistance 3 times. So that's why this pattern is known as the triple top pattern. So here you can say we have one top, second top, third top, and from there the market goes down again. The seller activated from there and they push the market down. They break through here. You can see there is a breakthrough on the market. This is a breakthrough. This is a clear breakthrough to the market, and once you get the breakthrough, you will take your entries. Where we need to take our entry. So market goes down, and this was the point where we need to take our entry. While market retested the neckline, this will be our entry point. And what should be our target? 1 by 2. As I always told you, for this chart pattern, the realistic target would be 1 by risk reward ratio would be 1 by 2. But if you want to go with 1/3, you can go with that, but it will take some time, and in some cases the market can go back up again to your entry point or more than that. So it will be a bit annoying for you. So it would be better to trade on with risk reward ratio of 1/2. So your target would be 1/2. Your stop loss would be on above the resistance 3 or R3, which we mentioned here, resistance 3. So you can put few pips above your stop loss, above the resistance, the third resistance from where the market pushed down. So there you will put your stop loss, and your target would be with risk reward ratio of 1/2. So now we will see an example of triple bottom pattern. So traders, here you can see this, there is an example of triple bottom pattern. The market was in downtrend. The market got support from buyers. Buyers pushed the market back up again. Their seller was activated. Seller pushed the market down towards the support line again. The market tried to break through the support, but they couldn't because the sellers was weak. So buyers pushed the market back up again. The market tried to break through the neckline or the support line, but it failed to do so. So seller pushed the market back down again, and they retested the support line or the support third time. That's why this pattern is known as triple bottom, and the market make three bottoms. Here you can see support 1, support 2, and the support 3, bottom 1, bottom 2, and the bottom 3. So from there the buyers again push the market, and this time they successfully break through the market. And once they break through the market, and the volume was very nice, there was the pattern of, we have already learned about this pattern. These are the three white soldier pattern, very bullish pattern, and it's very effective pattern as well. So that's the proper trend reversal. The market was in downtrend, and after making three bottom, the market goes up again, break the neckline. That was the neckline. I can mention it for you. This was our neckline. The market break through the neckline, and you can see again the market come back again and retested the neckline. And once the retest was successful, that was your entry point. Here you need to take your entry. This is the point where you need to take your entry. So once you take your entry, then you can put your stop loss, and your take profit. Where should be your stop loss? Your stop loss should be below this third support or the support line. You can put your stop loss below that, and you can take the entry once the market retests after the breakthrough. And once the market retests, your target should be almost 1/2 or 1/3. It's totally depend on you. So traders, that was all for today. I hope you liked the video, and in next video we will learn about the continue and the neutral chart patterns. So stay tuned, subscribe the channel so you will get the notification as well. So until then, goodbye.